Spring is in the air. The first trading day of May is in the books, and the Chartmaster has 3 names blossoming with opportunity as we kick off a new trading month. Cornerstone Macro's Carter Worth joins us now. Carter, what are you looking at?
Sure. So what do we know? We know, before we get to the charts, the S&P 14, 15 months later is about 20+% above its pre-pandemic level from which it crashed 35%. So I have 3 stocks. They're completely different. One is just back to its pre-pandemic high, so it's unchanged in 15 months. One is down 20%, and one is up 30% above its pre-pandemic high. But they're all at buy junctures by my work. Let's look at them. The first, just one chart, it's CVS. So here you can see it. It is sitting here right at the level from which it crashed, along with all stocks, before the pandemic hit. I think that's an opportunity. It is unchanged. It is coiling, toying with the prospects of breaking out above those former highs, as we've seen in so many stocks. So a circumstance that is buyable. Look at the next stock. It's a totally different circumstance. This stock, AT&T, is down some 20%. You can see it there from its pre-pandemic level. But it's an opportunity for a different reason. From my seat, it's a bearish to bullish reversal, a stock that has been basing and bottoming and is starting to show impressive relative strength and bullish price volume correlation with headroom, room to run. And the third and final stock is completely different yet again. Texas Instruments, a good and steady uptrend. This stock is way above its pre-pandemic level, 35%, much more than the S&P. But you can see this very orderly sequence, this pullback. This is exactly 10%. We just dropped from 197 to 177. All of those dips over the past year have been about that, 8 to 10%, and we think this is just yet another one, so it's a buyable moment of weakness. All 3 are different, but all are at buy junctures, at least to my eye.
Carter, thank you. Carter Braxton Worth of Cornerstone Macro. Karen, I know you like CVS.
I do, right. To my eye, which is different than Carter's eye, but I love to hear that or see that we see the same thing. For me, CVS is really a value first, right? And one of the lesser thought about parts of CVS is their Aetna business. This was an acquisition a couple years ago, and if you look what's happened to the other insurers, those have all done really well. And I think it is a reopened trade as well, both people getting vaccines, but going there and, you know, buying whatever sundries that maybe they bought on Amazon before. And I think that will continue. I don't think this is a one-time only. I think we'll see people getting vaccines or flu shots more than they used to in the past. And so with the valuation here, and I think the business has momentum to the upside, to me, this is, as a value trade, this is the best one I've seen in a while.
Of the 3 charts that Carter laid out, Guy, which do you like the best? CVS, AT&T,
So
or
would
Texas?
you rather? I love that. I mean, I can play that game because I understand the rules. CVS, Charlie, Victor, Sam. And if you look at it, November 2018 stopped at 80. I think we get through it tomorrow. They report tomorrow before the bell, by the way, and valuations are reasonable. So close above 80, this sucker's off to the races, and you have valuation on your side. So out of those 3 in the would you rather, CVS, Mel.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.